So why don't we talk about the investor angle on this first? The fact that the president is striking a Venezuelan ship, is this part of an effort by this administration for regime change? And if they wanted to change the regime, what would be the hope that they would, the outcome?
So Pete Hegseth, the Secretary of Defense, was asked that very directly and declined to answer the question and said that would be up to the president. It would seem that, yes, the U.S. government would like a change in leadership there. They put a bounty of $50 million on the head of Nicolas Maduro, who is the dictator of Venezuela. But it's unclear whether that means that there's going to be an invasion of some sort, because that would run counter to a lot of what the president campaigned on as, you know, somebody who's going to be non-interventionist. Ideally, if there is a regime change there, you could get a lot more oil production out of there. U.S. companies used to be very pervasive there. At one point, Venezuela was producing 3.5 million barrels per day. They could easily, over time, get up to 5 or 6 million barrels per day. That was the plan 20 years ago when Hugo Chavez first came to power.
So you and I were talking about this. So the idea here is that if there's regime change, you could boost oil production. Chevron recently given a license. But my question to you is, why would the president want to increase oil production in Venezuela as opposed to in the U.S.? And why would Chevron want to pump more oil? Because won't that just depress the cost of oil?
So the president campaigned on lowering gasoline prices, lowering energy costs. And this very much fits within that. Because remember, there's other places in the world where oil may come off the market if the United States, if the U.S. administration starts to get aggressive. If, for example, they start to pressure Iran and Russia even more, and their big oil supplies come off the market.
So it's funny you mentioned Iran and Russia, specifically Russia. The Russian President Vladimir Putin in China just a couple days ago with the leader of China, of course, Xi Jinping, also the leader of India, Narendra Modi. And it seemed like they were kind of, I'm using the phrase, thumbing their nose at the U.S., saying, we're all getting together. We're not going to really listen to your policies. Is this potentially this administration trying to send a message to them as well? Also in South America, where Venezuela is, you have Brazil, which is part of that BRICS nation that seems to be, I don't want to put it too strongly, but they certainly seem to be resistant, at least, to some of this administration's policies.
Oh, sure. The leader of Brazil, President Lula, is very much part of the left in the world and would be very much against, in general, a U.S. president, and definitely against someone like Donald Trump. There is no doubt that this administration has much more of a Monroe doctrine approach to the Western Hemisphere. They see Latin America as part of their sphere of influence. And that's one of the reasons, for example, that they started to get very aggressive about the Panama Canal and just how much China had gotten involved in the Panama Canal. So this would fit into their concerns very much about Russia being involved in Latin America and China being involved in Latin America.
Now, you're coming to us with something I don't think anybody else is talking about, Venezuelan sovereign bonds. So like the yield that is due on September 15, 2027, 9.25%. How could this tension between the U.S. and Venezuela impact those bonds?
So Venezuela defaulted on those bonds in 2017, and now there's more than $100 billion of bonds out there when you include past due interest. That is actually fairly actively traded for emerging market stressed sovereign debt. And the reason is it's interesting to a lot of investors is it trades at a discount, you know, 20, 30 cents on the dollar. But Venezuela, if it were producing as much oil as it could, in theory, could pay 100 cents on the dollar. You could actually make a lot of money on those bonds if and when there is a change in government and they were allowed to re-enter, the world capital markets. So those are fairly actively traded.